Welcome back, and today we're going to be talking about the euphoria phase in the market. This is the final stage in the bull run before we start to kind of reverse and move into the bear market. As you guys know from the previous cycle, we called the top of the market basically to the month, and we called the bottom of the market to the day. We didn't know that it was going to be FTX collapsing, but we knew where the market was in euphoria, and the fact that when we would rotate into a full bear market, it would take quite a bit of time, a little bit shorter than the entire bull market, but a little bit longer than most people think. And so in today's video, we're going to be exploring many different cryptos, projects, the prices, stocks, and other signals that we are in the euphoria phase. This is your final last chance to pull profits out of the market before we take a downturn. In the reversal in the markets, there is not a lot of liquidity, and we are going to be showing you some of the evidence that the liquidity is drying up. And when liquidity dries up on the buy side and everybody's going for the exit at the same time, that is when we move into the massive drop or crash, as some people call it. I don't really like to call it a crash because, it just has a negative connotation to it. When we really understand bulls make money, bears make money, but what happens to pigs? They turn into bacon, right? So we're going to be starting right here. Don't forget to give the video a free thumbs up. Hit that subscribe button. That way you never miss a new video. We upload every single day of the year to bring you the latest happening in the financial world. And like I said, I'm not here to call the top of the market or call the bottom of the market. My job is to analyze where the market is, and I'm sharing those thoughts with you. You don't have to agree with it. That is totally fine. But we could still be friends, right? Understanding how to invest is you want to understand both sides, whether you agree with it or don't agree with it, and also understand how to maneuver in these markets. And so let's get right into it. David Bailey, who's now the CEO and founder of Nakamoto, the new digital asset treasury company that's buying Bitcoin for their balance sheet. He also is formerly from Bitcoin Magazine. I actually think he's still there. But anyway, he said there's not going to be another Bitcoin bear market for several years. Every sovereign, bank, insurer, corporate, pension, and more will own Bitcoin. The process has already begun in earnest. Yet, we haven't even captured 0.01% of the TAM, total assets under management. We're going so much higher. Dream big. Okay, guys. Now we heard from Michael Saylor. There's going to be no bear market. David Bailey, no bear market. And who's buying the top of the market? Them. They are buying the top, literally the top of the market. We're not buying the top of the market. In fact, we are selling the top of the market. Many people who watch my videos have already sold, regardless of what the bulls are saying, because we understand how these cycles operate, how the sentiment can shift overnight. Right now, the fear and greed index, you can see on the top right of the screen, is 50. It's right in the middle. And so the bulls feel comfortable, the bears feel comfortable. But when I zoom out on the charts, where has Bitcoin been going? Where has crypto been going over the last couple of years? Really, the last 2.5 years. It's been going basically straight up. And just because it hasn't hit your targets or you bought higher than where many of these cryptos are does not mean that we were not and have not already been in the bull market. And so then we hear from Grant Cardone, well-known real estate and equity investor. He said, why would someone dump a load of Bitcoin on a Sunday night rather than waiting until tomorrow, meaning Monday? Explain, please. And effectively, they're talking about the fact that Bitcoin, listen, guys, if you've been watching my videos, and if you haven't, make sure you guys are subscribed, because again, I'm giving you guys the most honest analysis on the crypto markets here on YouTube. And so what we saw over the last couple of days was we saw a run up, boom, straight down, a run up, boom, straight down. And so these bulls, these people like the Cardones who are buying the literal top of the market, Anthony Pompliano buying the top of the market, David Bailey, Nakamoto buying the top of the market. Just because they bought the top of the market doesn't mean that we're going to keep going straight up, that the market's going to say, okay, these investors started buying, so we have to keep going higher. Guys, we haven't even had a correction, like a real correction, pretty much all year. Like at the beginning of the year, we had a little bit of a correction, but then we've been going straight up and people are lost in the sauce, completely lost in the sauce. Now saying, well, why would they dump their Bitcoin on a Sunday night instead of waiting until Monday? Because, Grant, the market doesn't revolve around you. And somebody on the other side of the world, where in the US, we're on a Sunday night, in the other part of the world, it's already Monday morning. And so they are not, right? This is very clear at this point. I mean, if you guys don't see, I mean, listen, I would say like 99.5% of my viewers see this and get it. There's like a very, very small percentage. I don't think we're ever going to be able to break through to, right? Because I get comments, Cryptoviser, last video you said we're bullish, now you say we're bearish. I'm like, my thesis hasn't changed from video to video. You're just not listening. You're listening to what you want to hear, not what I'm saying. Grant Cardone is asking why somebody would dump crypto. Because guys, nobody gives a shit what your portfolio is. Nobody cares how the market is going to be affected after you sell. It just is what it is. And so to see tweets like this, like, why would somebody dump? Can you explain it to me? Grant, the answer is because they don't care who you are investing, who are you, like who you are, why you're investing in crypto, when you invested in crypto, they are taking profits. And by the way, they have been taking profits. This is why we're seeing lower highs and lower lows on the charts. This is why when you zoom out, it looks like we are in the rotation phase. But meanwhile, you know, we have Michael Saylor on CNBC saying Bitcoin will go up 30% a year for the next 20 years. I mean, again, we're seeing diminishing returns year over year from cycle to cycle. This is very clear. You can look at it on the halving tracker. You could just look at it on the percentage of returns. But generally speaking, I look at it like basically what he's saying here is 30% over the course of 4 years, which is a Bitcoin cycle, would be basically about, what, 120% higher. So with the compounding, maybe like 130, 140%. That's like basically doubling in one cycle for the price of Bitcoin. And I think that annualized over a long period of time, this is a pretty good estimate. Like, I'm not disagreeing with Michael Saylor here. But the thing is, this is compounding annual growth. This is not like consistent growth. 1 year you may have negative 50%, but the next year you have 200% gain, and it offsets to about whatever I'm just throwing out numbers. These are not the actual numbers, but you guys kind of get it. And so a 30% annual growth rate, yeah, this is probably one of the best investments for most people, but you have to understand where we are in the cycle, because otherwise you're going to get wiped out. And we are already seeing, because we haven't even broken $100,000. And they're already worrying. Why are people selling on a Sunday night instead of waiting till Monday? Because they don't care. Meanwhile, Michael Saylor, he's buying on Sunday. Why is nobody asking why he's buying on Sunday instead of waiting till Monday? Anyway, Michael Saylor and MicroStrategy just bought more Bitcoin. But what's different now is how they acquired the money. Remember, just the week before I'm recording this video, they changed the guidance. MicroStrategy, during their earnings call, said, we're not going to sell any more shares on the open market unless the NAV is over 2.5. And then 2 weeks later, they reversed that and said, no, we're just going to sell shares at any price. Well, they started doing that. And we could have kind of figured that out. I mean, the price of MicroStrategy just plummeted after they made the announcement. Most people thought it plummeted because they made the announcement. I knew that it was plummeting because they were selling. They're not just going to make an announcement and then just not sell, even though the MicroStrategy bulls are like, oh, no, this is just guidance. They're not really going to sell shares on the open market. Well, they did. And boom, they sold 875,000 shares for $309 million. And this is also in line with what my thesis has been, that they can't acquire that much money from their debt facilities anymore. They only got 20 million from Strike, 26 million from Strife, less than 100,000 from Stride, and Stretch got nothing. So most of the money is coming from at the markets. And so this tells me that they are tapped out. They are tapped out in Strike, in Strife, and in Stride, and in Stretch. And so if they're out of money or out of tapped out in these other facilities, which, by the way, are potentially just insiders selling their shares in the company to then go buy these preferred shares, because these debt facilities, Strike, Strife, Stride, and whatever, these are all preferred over the common equity. So MicroStrategy is like a lower tier than these. So if you own MicroStrategy, well, they're not only selling the shares, but if the company goes under or goes bankrupt, you have no recourse to the actual Bitcoin. These facilities do. But again, it seems like they're starting to tap out. And so the biggest buyer in the market is starting to slow down at the top of the market. What does that mean? Well, I'm pretty sure you guys can figure it out. And this is, again, the MNAV of MicroStrategy is still extremely, extremely high. And if you look at the chart of MicroStrategy, just look at this chart and tell me what you see. Now, the bulls will look at this chart and say, oh, well, it's been consolidating. We now have a bottom. We have a floor. To me, I see a 1, 2, 3, 4, 5, maybe even 6 tops, right? So a quintuplet top. And you're still bullish. Even though they're selling shares in the open market, they're going to continue to sell shares in the open market. And they're going to do it until they compress the MNAV down to 1, where it should be. Another indicator of where we are. Meanwhile, Micro to Macro, one of the Twitter analysts with about 100,000 followers, said, this is my base case, and posted a chart from another user that shows where we are right now and then shows an extension of the cycle to show a peak, basically, where most people think at the end of 2025, early 2026 in the market, and then the bear market into 2027, right? So the whole year 2026. And while this may occur, there is so much selling in the market. There's so much liquidations occurring in the market. There's so much other stuff. And the Bitcoin narrative is slowing down because, again, all these companies like MicroStrategy, they're buying Bitcoin, buying Bitcoin, buying Bitcoin. They make no money. And the MicroStrategy people say, yeah, they made $10 billion on their last earnings call. It's financial gibberish. It's not like they have $30 billion of cash in the bank. They have to sell their Bitcoin to realize that. And they already said they're not going to do that. So it's not productive, especially when you compare it to Ethereum and many of the other altcoins where you can actually yield an actual return on that through staking or through lending or whatever else. So again, I think MicroStrategy is a very clear signal, but yeah, we have a lot of analysts out here that are continuing to push this extended cycle. And again, if everybody in the market believes we have an extended cycle, we don't actually have an extended cycle. And these little dips in the market from 120 to 111 and people are freaking out, these are indicators. They're already freaking out from a $10,000 drop, which this is not the drop I'm looking for. I'm looking for a drop under 90,000. I'm looking for a drop at MicroStrategy's dollar cost average price around $74,000. Until we see that, there is no dip. This is not a dip. But the bulls are like, oh my God, this is the dip to buy. I'm like, nope, this is the dip to sell. That is why you see whales dumping 100,000 Bitcoin on a Sunday night because the cycle's over. They're taking the liquidity. And so this extended cycle, a lot of people are going to get wrecked. Same thing happened in 2022. End of 2021, I told my viewers, the cycle seems to be over. 2022, I started selling my crypto. Thousands of subscribers unsubscribed because they didn't agree that I was selling my crypto. Like my portfolio has any impact on your portfolio, it doesn't. And so, yeah, I lost a lot of subscribers from selling my crypto because they kept saying, no, Cryptoviser, we have an extended cycle. It's going to go into the middle of 2022. Well, middle of 2022 was the bottom. That was the macro bottom of the market for most altcoins. Anyway, we're now hearing Arthur Hayes is stating that hype is going to be over $5,500 per token in 2028 or 126 times its current price. Yeah, listen, I love Arthur Hayes and his analysis on these cryptos, but in my view, Hyperliquid is going to zero like most of the other coins connected to DEXs. This popped up at the beginning of a bull cycle. This is pumping through this bull cycle. It is a top 20 crypto in the bull cycle. Meanwhile, cryptos with actual fundamentals besides, think about Hyperliquid. Right? What is Hyperliquid? It's a DEX. What do DEXs do when you're trading on leverage? Liquidation. So this is hyper liquidation. And people are like, oh my God, I'm using Hyperliquid. I'm going to make so much money. Yeah, and you're going to keep thinking that we're going to extend its cycle until you get liquidated in a hyper liquidation. Guys, you can't make this stuff up. You literally can make this stuff up. So maybe they'll go up to 126x, but highly likely they're going to get liquidated as well. Just like every other coin that gets pumped into the top 10, top 20 with no actual fundamentals, and then it goes to zero or very close to it. Maybe it'll stay around. Maybe it won't. I'm rooting for Arthur Hayes. I'm not against it. I just think that his analysis that we're going to see a $5,500 price is absolutely ludicrous. I mean, think about this. We're at a $15,400,000,000 valuation, okay? We're going to times this by 126. He believes Hyperliquid is going to be worth $2 trillion for a DEX that liquidates pretty much the whole market. Nope. Not going to happen. Not going to happen. You know what Hyperliquid is of this cycle? It's the FTX, the liquidation mechanism. Because remember, FTX was trading against you. So they were liquidating you. That's how they were actually making money. Now, Hyperliquid, I'm not saying they're going to do that. I just don't think that they're going to go up 126 times to $2 trillion, even over the course of another cycle. It's not going to happen, but maybe it will. But again, these are top of market indicators, right? That's just the way that I view it. And meanwhile, we're seeing the Coinbase CEO posting a sub $5 million market cap. What part of the cycle is this, he asks. Well, this is the euphoria phase. We are in it. It's not way behind us. It's not way in the future in the middle of 2026 or end of 2026. Euphoria is now. And the reason a lot of people don't think we're in euphoria is because they believe all of this nonsense that, oh, we haven't even gone higher. The bull market hasn't even started. Nobody's making money in the markets. They are. If you're not, it's probably because you're not taking profits and you just keep hoping and praying for higher prices. I mean, the risk reward to go from $110,000 to $250,000, right? That's a 2x. Or we could half to $60,000, $70,000. Where do you think, like based on the price going from 15,500 in a bear market to where we are now, 8x, 5x, 6x, wherever it is, the risk of dropping is significantly higher. But Cryptoviser, the Federal Reserve is going to cut rates. Maybe they will, maybe they won't. But typically when they cut rates, it's not the most bullish indicator in the world. Another top of the market indicator is the grift. Now, XRP had this entire cycle, right? And we've seen the XRP case get dismissed from the SEC about 15 times. I remember last year it was dismissed. Then in the end of last year it was dismissed. Early this year it was dismissed. When Trump took presidency, it was dismissed. Then it was dismissed again. I mean, literally, I've never seen a case dismissed this many times. But the XRP army, this is their only narrative for the cycle. What other narrative has the XRP army popped up? Well, now they have their own credit card, which, by the way, guys, this is literally just the Gemini credit card with an XRP logo on it. Everything is identical. Everything. Everything is identical to the Gemini credit card. And it's being launched by Gemini, which, by the way, historically has not been an XRP fan. But the fact that Gemini has gone fully deep into XRP and is effectively, I don't want to say grift because I like Gemini and I don't think it's a grift. I think that they're just trying to make money, which makes sense. But the XRP army looks at this as like, this is the most amazing thing in the world. And in my view, it's not. It's literally the same Gemini credit card, just with an XRP logo on it. And you can earn XRP, but you can earn XRP with the regular Gemini credit card. So what has XRP done this cycle? What have they done? What has Ripple done for XRP? And by the way, I'm going to be making a separate video specifically on XRP because there's more to this partnership with Ripple and Gemini. It seems like Ripple is help funding some things for Gemini, or Gemini is help funding some things for Ripple. But I'm going to be doing a separate video on that. But it's just kind of like an indicator of where we are in the cycle. Because the XRP army keeps saying Ripple's going to, Ripple's success is going to mean XRP success. But Ripple is selling XRP on the open market constantly. Everybody's saying an XRP ETF is going to be super bullish for XRP, but based on what? It's not like they're buying the coins on the open market. They're buying it from Ripple. That's what they're going to be doing. And so when I saw this XRP credit card, I was like, oh, this is going to be on the XRP ledger. It's not. Oh, it's going to use XRP to pay transactions. It's not. It's going to be somehow integrated with RippleNet. It's not. It's literally just the Gemini credit card with an XRP logo. And the XRP ecosystem is in euphoria about this. This is the best thing that ever happened to Ripple, or XRP, I should say. Anyway, moving on, a notable phenomenon that occurs at the start of a rate cut cycle is that companies pause and wait for the rest of the rate cuts. Then they invest. This can stall the economy. And I would agree. Guys, there's a big difference between rate cuts from the Federal Reserve and money printing. Now, when we're thinking about crypto and markets going higher, you want money printing, not rate cuts. Because the first rate cut is just the indicator. Like, what else are they going to do? It doesn't really move the market because it's already been priced in, right? Like right now, everybody's in euphoria. Oh, the Federal Reserve is going to cut rates. Bitcoin is going to $500,000, even though that's not going to happen because it's not money printing. But the market is pricing all of this in. So when the Federal Reserve does cut rates, almost no move in the markets. In fact, they may go down by the rumor, sell the news. Because we really want to understand what they're going to be doing in the future, how low they're going to be pulling it down, and how fast they're going to be pulling down the Federal Reserve, interest rate. If they're going to say, "Oh, well, we're going to cut it down by 0.5% over the next 6 months," the market's not going to like that. And so a rate cut does not equal bull market. In fact, it could indicate bear market, as I've explained over and over and over and over on this channel. And so I believe that we are already in and potentially already out of the euphoria stage in the market. It's not coming in the future. It's not like 6 months out. It's here. We are either in it or out of it at the end stage of it, right? Because the complacency phase is very similar in sentiment to the euphoria phase. That's why I call it the bull trap, because it makes you think that we're going back up, right? Every dip, you have to look for the strength in the pump and the strength in the dip. Right now, we're seeing more strength in the dips than the pumps. And the companies like MicroStrategy that have been buying a lot of Bitcoin, they're starting to tap out. People are going to say, no, Cryptoviser, they're not tapping out. No, they are tapping out. They're starting to slow down because the big money, they're smart guys. People keep saying BlackRock is buying Bitcoin. No. BlackRock is not buying Bitcoin. BlackRock bought Bitcoin. Everything that you're seeing now is just trading. It's not actual buying, like 2 billion a week. No. Last week it was negative 3 billion. This week it's positive 2 billion. That's a net negative 1 billion. And everyone's like, oh, but last week it was 2 billion. This is so, Wall Street is buying, BlackRock is buying. And they missed the point. And by the way, you can tell we're in the euphoria phase because it doesn't just affect crypto. It's the whole market. Tilray Brands is pumping from 50 cents last week, 50 cents, 36 cents just a few months ago, all the way up to $1.36. Why? Well, there's a lot of conversation right now, and supposedly some reporting shows that multiple Congress people state that cannabis will be rescheduled on the drug list by the end of 2025. And so you're starting to see the cannabis companies starting to pump. This is an indicator that we're in the euphoria phase as well. Cracker Barrel, right? Big moves to the downside just recently. Again, this is volatility in the markets. Everybody is so upset that Cracker Barrel rebranded and refreshed their restaurants. Meanwhile, the people who are complaining probably never been in a Cracker Barrel, right? The older, like a lot of people are missing this in the macro sense. The older generation, they're starting to step back, right? Either retiring, no longer in the markets, no longer able to go on their own to these kind of restaurants. And so if the companies that were focused on the older generation, they have to rebrand, they have to change. right? And I mean, if you look at Cracker Barrel's numbers, their numbers have been horrible. Last year, they made 1% profit, right? They sold about $3.5 billion in revenue. They made $40 million in profit. Basically, almost the same thing the year before that. And so their revenue and their overall profit has been coming down. So maybe the rebrand is a smart thing, but the market didn't like it. The market didn't like a rebrand for the company to improve, and it's down significantly. These type of irrational moves in the market, not only to the upside but also to the downside, indicate kind of where we are, and could potentially. I mean, I don't know what this company is actually worth or valued at, but they're making $4 billion a year, and it's valued at $1.2 billion, right? And the investors didn't like a rebrand. I mean, it is what it is. And then you look at Open Door, right? Open Door is a technologies company, an online company that buys and sells residential real estate, right? I mean, it went from 50 cents and now we're already 10x. And I don't even understand why. Like, the housing market hasn't gotten any better, has it? So why are we jumping up this high? Again, these are indicators of end stages of bull market. Money is just deploying to everything. Things are pumping based on news, based on speculation, based on, things that really should have no impact. But again, remember what I keep saying. Eventually, the markets are going to go back to fundamentals. Vadim on X said, "What do I expect from the new Polygon staking ecosystem?" Which I didn't even know that Polygon was updating, but there's now a new staking hub for Polygon, designed to secure and unify the entire Polygon ecosystem. It might be based on the current Polygon proof of stake validator set and later expanded, possibly integrated with the AG layer from day one. He says the guaranteed base yield for the next 8 years will be around 100 to 105 million Polygon per year, or around 1% of the supply, translating into about 2 to 2.5% yield per year. Everything else will be on top of that. Now, this yield is very in line with a lot of staking ecosystems. So it's not like over and it's not really under. It's kind of just right. The AG layer will generate fees. Already 3 types of fees are announced: settlement, fast interoperability, and atomicity. Chains like Polygon, Proof of Stake, Katana, and others using the AG layer will pay for these services when their users opt in, and they will opt in. The new user experience and apps will make sure of that. Vadim continues, saying the Vault Bridge is free for AG layer chains, but not for external chains. If adopted widely, it could generate $1 to $5 to $10 million in revenue per year. Mark, I guess, from Vault Bridge already said that over 10 teams are integrating Vault Bridge. Monetization could come from revenue sharing and integration fees, or around 0.1 to 0.3% fees on bridged total value locked. Then he says the Polygon proof of stake chain, plain and simple, network usage fees. It currently brings around $2 to $3 million per year, which is not a huge number, but if it evolves into a true stablecoin and payment chain, this figure could grow significantly. Plus, its user base can be monetized through other AG layer services. He says a liquid staked Polygon token is coming, unlocking DeFi utility for staked Polygon. This boosts demand for staking, increases security, and helps export Polygon across different chains, especially in the AG layer ecosystem. He said, "I still believe the staking hub will be available to external or incubated projects from the AG layer. That was part of the original Polygon vision. For example, Maiden might use it with a 50-50 staking split between Polygon and a native Maiden token." Bonus, he says, is nobody said this in the end. Polygon Labs is still building. Things like the AG Wallet and AG Pay might also generate yield for Polygon holders. Bonus 2 is don't forget airdrops. Stakers are already eligible for several, and more are coming. And so he said things are looking quite optimistic, but adoption is key for Polygon. None of these numbers or products matter without any real usage and liquidity. That's why it hasn't launched yet. Adoption must come first. And so there are already some things that we're seeing growing in Polygon. You can see that the Polygon staking hub currently, staking.polygon.technology, has, you can see 105 validators on the network. Total stake is 3.3 billion coins, or just under $1 billion. Total rewards distributed is over 1.1 billion Polygon, or $285 million. And so there's a lot going on here, and there's a lot of companies and people that we know who are actually validators on the network, or I should say companies that we know. You can see Google Cloud is one of the validators on the Polygon network, with about 60,000 Polygons staked. Zero Hash is another one. You can see some of these other companies and node operators here. So it is a very robust ecosystem, and we know there's a lot of usage for layer 2 and also stablecoin payments and stuff like that on Polygon. And so as we start to see onboarding into the blockchain ecosystem, we have to really pay attention to what networks they're using, what the fee and payment schedule looks like, and what the sustainability of it all is. Because remember, Solana, after the meme coin fiasco at the beginning of 2025, their network revenue dropped 97% because meme coins is not sustainable, right? And so these are just some indicators of, where Polygon's ecosystem is. And a lot of people are not paying attention to Polygon because they're focused on Hyperliquid, or they're focused on MicroStrategy. But when you look at the top 20 and you look at the technologies and the deployment and the usage of the top 20 ecosystems, none of them are really coming close to where Polygon is. You can see that unique addresses continues to rise within the Polygon ecosystem and is now sitting at about 524 million total distinct addresses, with about 100 to 200,000, maybe even more, new addresses per day. You can see that the transaction chart has kind of slowed down since the big bull run in 2024, but we are seeing sustained usage and slight increases in network usage as well. So this is where potentially it's a good idea to look at the fundamentals of the chains to see which coins will potentially perform, because at the end of the day, all of these coins can go much, much lower. Okay, it doesn't matter how they've performed. It doesn't matter what you think. It matters what the geoeconomic, right, the global economic markets are doing. And so we are literally at multi-year lows on Polygon, multi-year lows. And since Polygon rebranded to Polygon versus Matic, we're the lowest Polygon has ever been. Meanwhile, Polygon is fully diluted, right? Meaning all the coins are in circulation. There's ways to make money. There's obvious institutional and sustained usage of the network and growth. And so everybody's paying attention to Hyperliquid. Everybody's paying attention to Solana. And what has Solana brought to us this cycle? Meme coins. What has XRP brought to us this cycle? More sales from Ripple on the open market. And now a credit card that says XRP on it, but doesn't even touch the XRP network or utilize XRP. And so are the fundamentals really there? Or is a market mispricing some of these assets? Well, pretty sure you guys know where I think about that. Because look, Galaxy Digital, Multicoin, and Jump Crypto plan a $1 billion Solana fund, according to a new report. A Bloomberg report said that 3 companies are potentially looking to form the largest treasury dedicated to Solana. They added that these 3 companies have tapped Cantor Fitzgerald as the lead banker. It's also pretty interesting as well. Aave is also in the midst of some drama. And we've been seeing the Aave price kind of moving up and down and up and down, and a lot of volatility, which could be bullish or bearish, depending on the outcome of all of this drama. But let's kind of understand a little bit more about what is going on as Aave has dropped on rumors of World Liberty Financial's token deal. Now, there's conflicting claims over an October governance proposal sparking debate about Aave's role in World Liberty Finance. Now, remember, World Liberty Finance is the Trump firm that is investing in cryptocurrency. And so, effectively, there's rumors that Aave would receive a different token allocation from World Liberty Finance. But the World Liberty Finance team told Wu Blockchain that the claim that Aave will receive 7% of the total World Liberty Finance token supply is false and fake news. Wu Blockchain was referring to a World Liberty Finance community proposal from October of 2024, outlining an arrangement in which the Aave DAO responsible for governing the protocol, will receive 7% of the World Liberty Finance governance tokens circulating and about 20% protocol revenues generated by the World Liberty Finance deployment on Aave. And this is very interesting because if you've been following, and I have, the World Liberty Finance team purchased Aave, I think it was in 2024, and then they got rid of it in 2025. And I was like, why would they sell Aave? And we have been seeing a lot of movement in the price of Aave over the last year. I mean, look at this chart from last year. We went from $132, it went into the Trump pump right after the election to $400, right? So that's about a 4x, 3x. Came back down to $130, right? Gave back all the gains and now is starting to move back up. But what you can see is a lot of volatility over the last couple of months, right? But it does look like the bottom was formed and we've been going higher, but now we're testing last year's highs. Is it going to sustain? Maybe not with all of this drama, but let's understand a little bit more. The Aave founder, Stani Kulechov, said that the proposal Art of the Deal called the proposal Art of the Deal, and in a separate post signaled the terms of the proposal were still valid. Following the rumors, we saw a lot of volatility in the price, right? So what in the Aave is going on here? Like, are they arguing? Are they not, getting along? Or is this just a money grab? I don't know. But effectively, Vadim also kind of talked about this. He said, this reminds me of old tensions between certain Aave DAO members and Polygon. Most likely it went like this. Polygon was looking for a lending partner for Vault Bridge. Aave proposed the terms, obviously very favorable to themselves since they control over half the market and can dictate conditions. Polygon got a much better offer from their direct competitor, Morpho, who was far more motivated to win that deal. Add in some likely personal issues around the negotiations and you get the fallout. Hopefully one day we'll learn the details. Right now it's clearly under NDA, right? Non-disclosure. Aave is an absolute DeFi giant. Their position there is unshakable, and they can push smaller ecosystems to bend their terms. Let's see what happens with their partnership with World Liberty Finance. And you can see here, Stani, the founder of Aave, said the art of the deal. And it says, at current prices, the Aave Treasury will get $2.5 billion worth of World Liberty Finance, making them one of the biggest winners of this cycle. And it is a screenshot from the World Liberty Finance website. It looks like it says Aave DAO will receive 20% of the protocol. Fees generated by World Liberty Aave 3, and also receive approximately 7% of the total supply of World Liberty Finance coins, But, yeah, apparently... Oh, I meant to go to the next slide. Apparently, World Liberty Finance is saying this is not what actually occurred. But I mean, you can actually go to the Aave DAO, and this says from 8 months ago, so basically the end of 2024, early 2025, World Liberty Finance Aave instance on Ethereum mainnet proposal, and it passed with a 99%. And this is another proposal on World Liberty Finance about 9 months ago. And you can see 8 billion coins voted yes. So everything voted yes. And this is the part where it shows Aave would receive 20% of the fees and 7% of the supply. But it seems like World Liberty Finance is pushing back on that and saying it's not true. It's not happening. So we'll have to keep a very close eye on this to kind of see. But again, these are indicators. These are signals of where we are in the cycle, because when the markets are going up and everybody's making money, you don't get any of this crazy back and forth and, why are they selling their coins on Sunday instead of Monday and all that kind of nonsense. You're not going to see this in the bottom of the market. You're not going to see this at the top of the market. Like when we're moving higher, when people are making money, everybody's getting along, everybody loves everybody. And so this tells me the smart money, World Liberty Finance, Aave, all these ecosystems understand that the cycle is coming to an end. And we are already in euphoria. There's going to be a lot of people who say, but Cryptoviser, the fear and greed index is all the way not on red. Why does it have to be? You're going to say, Cryptoviser, you've said it before. Yeah, I've theorized that if we see it in red, that's extreme fear. If it's extreme greed, it's, that's the time to sell. But it's not a guarantee. You have to take everything in aggregate all the information together, and then formulate an opinion. There's not one chart that's going to tell you where the cycle is. There's not one indicator that's going to tell you where we are in the cycle. There's not one thing that's going to make the cycle. It's a combination of many different things. Seeing MicroStrategy tapping out, seeing Nakamoto's CEO saying never going to have a bear market again, seeing Gemini grifting to the XRP ecosystem and the XRP ecosystem cheering it on, saying, yay, yay, we have our own XRP card now. And it has nothing to do with XRP. It literally just has a logo. And you earn XRP back for using your card. Where is the XRP coming from? Are they buying it from Ripple directly? Possibly. And so is that bullish? I don't think it is. And again, I'm not a maximalist. I told my viewers, by the end of this cycle, and I believe we are there, I want zero crypto in my portfolio. I want to start in the bear market with zero crypto, nothing. And so this is because I want to restart, refresh. We've done a lot of research, a lot of learning about all of these ecosystems over the last, several years since I started this channel. And so we're gonna cut all the nonsense in the next cycle, right? In the depths of the bear market, and we will get there. We will get there within a year, I think. When we get to the depths of the bear market, we're gonna know exactly what we need to buy, when we need to buy it, and how much we need to buy. We're gonna know that. We're gonna know whether Hyperliquid is actually gonna go up 126x. Because if it makes it into the bear market, maybe it will. Maybe from the low it will. But definitely not from where we are. And it has to make it through a bear market. The other ecosystems that have gotten pumped up this cycle, Stellar, right? What is Stellar's ecosystem actually doing with XLM? Right? If we're at the end of the cycle, there's very little time left for them to announce anything. And so this idea that just magically XLM is going to come into the picture, it's not. If it hasn't been already, it's not. It's the same thing like people are saying, oh, well, BlackRock is buying. It's like, no, BlackRock bought. What are they going to continue to do to expand the usage and the investment in this ecosystem? Are they going to invest in infrastructure plays? Are they going to invest in making the Bitcoin and other cryptos productive? These are the questions we got to ask. And I'm telling you guys, there's going to be a lot of cryptos in this next cycle that are not going to be around again. And many of them are going to be in the top 20, top 30. Because you can only grift along so long and say, oh no, we're going to just wait a few more months. Just wait a few more months. We'll get this launch. We'll get the adoption. Guys, Wall Street is interested. And so if they were going to use this ecosystem, these ecosystems by now, they would have already done it. They're not going to wait until you think that your bag needs to be pumped to do it. It's the same thing like with MicroStrategy. Everybody's waiting around saying, oh, well, MicroStrategy is obviously going to be included in the stock indices because now they're making money. And it's like, no. Do you think that the S&P 500 board or committee that chooses what companies to go in this stock index, you think they're sitting around saying, well, according to their SEC filings, they're making $10 billion in a quarter. Wow, this is a very profitable company. No, guys, they're looking at their balance sheet and they're saying they didn't cash flow anything. They're not actually making any money and they haven't sold any of the crypto. So all of their SEC filings showing that they're making $10 billion, it's all just, as Jim Chano says, financial gibberish. And so they're not stupid. They're not going to put this company in the stock index. Not just yet, I don't think. But the MicroStrategy army is like, no, it's going to happen. It has to happen. It's going to happen. And so what if it doesn't? The floor is going to be, that's what a rug pull is, right? Not saying MicroStrategy is rug pulling the ecosystem, but the bulls in the ecosystem are rug pulling their own community because they're making their community think it's guarantee, it's a lock that MicroStrategy is included in the stock index and nothing has been decided yet. That is the signal that we are at the top. That a Twitter MicroStrategy bull that sees no issue buying $1 of Bitcoin for $1.60, that person 100% guarantees this is going to be included in the stock index in the United States. This is complete BS. It's not going to be because they're not actually making any money. But again, it doesn't matter if they are or are not included. Just the speculation around it and the hubris of, no, it's definitely happening, tells me bet against that. Bet against that, not for it. But anyway, that's just my viewpoint on the markets. Let me know where you guys think we are. But I think the euphoria stage is already underway, and maybe it's already over. Because euphoria, in entering euphoria or being close to the euphoria stage can also look like complacency phase. Like people think that like it's going to be announced we are in euphoria. In fact, right before I recorded this video, I was watching one of the financial news channels, and it literally said on the screen, markets move in euphoria or something like that. And I was like, whoa, there's the title of this video. Because now it's on TV and they're saying euphoria. So we're already in it, or we're past it. Let me know what you guys think down below in the comments. Don't forget to give this video a free thumbs up. Check out my other videos on the channel, and also hit the subscribe button. I'll see you when I see you. Crypto on.